Hey, what's going on, everybody? Welcome back to the channel. Hope you guys are having a wonderful day. Now we are going to kick off, since the weekend is coming to an end, we're going to kick off this video with the top 5 cryptocurrencies to watch this week. You're not going to want to miss it. Stay till the end so that way you can get all of the details on the whole video. Plus, I'm also going to be sharing. All right, so let's get this bad boy started off. We got the top 5 cryptocurrencies to watch this week. We got BTC, ETH, DOT, BNB, and UNI, the Unicoin. So Bitcoin may be in the last leg of its parabolic run, and if the rally sustains, select altcoins may surprise to the upside. Bitcoin, BTC, has consistently been hitting new all-time highs over the weekend, but the largest surge has also created a new high against gold. According to MarketWatch data, this suggests that Bitcoin has begun gaining acceptance as the new store of value, and that may attract more customers away from gold into Bitcoin. Analysts suggest that the latest rally above $30,000 could have been triggered by aggressive buying from institutional investors on Coinbase, as suggested by the large premium of about $350 compared to the price in Binance. With the latest rally, Bitcoin hit a market capitalization of over $640 billion today, just shy of Alibaba, the 9th largest company in terms of market cap, at $649.31 billion. Meanwhile, breaking $30,000 could be creating FOMO among institutional investors who have missed buying Bitcoin at lower levels. And I've been talking to a lot of my own personal friends that have nothing to do with any crypto, and they're actually starting to reach out to me now and asking questions about, should I buy now? Should I not buy now? And one thing that I have come to learn when it comes to Bitcoin is it doesn't really matter the price right now, right? We are at 30,000, but if you are a believer in Bitcoin and where it's going, it's not the price that matters, it's how much coin are you holding? Like, how quickly can you get to be a holder of one full coin? Like, that's the goal. We need to be holding one full coin and buying at highs, buying at lows, whatever the case may be, buying little bits here and there. And that is very important. In fact, I've been recommending to all of my new friends that are just getting into crypto to start with the company Coinbase, because of the fact that you can start with the spare change from your purchases, which is really great. So if you want to check out Coinbase, link down in the description. I made a video on it. Check it out if you want. However, this buying will need to sustain to keep the uptrend intact, because if the rally stalls, some institutional investors and momentum traders who have purchased at lower levels may be tempted to book profits. If that happens, it could pull the price down quickly and turn the recent purchases by investors into a loss, resulting in a rush to the exit. Therefore, traders must be cautious and employ proper risk management strategies to protect their paper profits. Meanwhile, let's look at the charts of the top 5 cryptocurrencies that could extend their up move in the sentiment, if the sentiment remains bullish. Now, another thing too, that I've been talking with a lot of Bitcoin newbies that are coming into the system that are really excited about buying, but they're also scared to buy because it is so high. And they're like, well, if I put in $1,000, I don't want to lose $1,000. And the thing is unless Bitcoin goes to zero and it never rebounds, you don't actually suffer a real monetary loss. You put $1,000 in there, you hold it, you never lose it, because when you buy $1,000 worth of Bitcoin, you're buying a certain amount of Bitcoin. You're not buying the dollar amount, you're buying a certain amount of Bitcoin, and that certain amount of Bitcoin, let's say that you buy a handful, like 0.00004 or something like that, right? It would probably be more like 0.004 for like $100, okay? So expect you buy a handful of Bitcoin at this exact moment. Well, that handful, it's not like sand is creeping out of your hand. You still have that handful of coin. It's just gonna stay there. It doesn't go away. The value of that handful may go down, it may go up, but it doesn't go away. eventually, if you're like us people that want to hold Bitcoin for the long term, it will keep going up. So even if it were to drop down to $20,000, you don't lose any money. It's unrealized losses until you sell it. So if you buy right now at $33,213, it goes down to 20, and then you sell it, then you lost. If you don't sell it and you just wait it out and it comes back up, then you didn't lose anything. So I want you to keep that in mind and only use money that you can afford to lose. You're not playing with your rent when you're buying Bitcoin here. That's not how it works, okay? And this is not financial advice, by the way. This is just my personal opinions. If you need financial advice, talk to a financial advisor and get advice from them. So let's talk about Bitcoin. Bitcoin broke above the $30,000 overhead resistance on January 2nd and picked up momentum, which could have been due to the short squeeze and continue buying from the momentum traders. While a parabolic rally provides outsized returns with a short time, it also increases the possibilities of a sharp reversal that may catch many traders off guard, because after such a strong move, the price could retract anywhere between 62 to 79% of the entire rally. If that happens, BTC USD pair could drop to the $20,000 mark, or a drop over 30%, which at the moment looks unimaginable. In a melt up, it is difficult to predict the level where the rally may end, because traders continually chase price higher due to FOMO, fear of missing out. The next technical level, which may act as a resistance, is $37,000. Shorting a rally because it's overbought on all time frames could be a losing proposition, because during a blow off top, the price could continue to remain overbought for much longer than most traders accept. But traders who own long positions should use proper risk management principles to protect their paper profits and not get carried away with greed. Okay, so here we have the actual chart of Bitcoin. This is the daily chart, meaning every one of these little candles is a 1 day. Okay, so this is the parabolic arc, the purple arc. As you can see, it's been just riding right along that arc perfectly. And in this, you can see that we are at 33,599 in this snapshot here. Okay, so with that being the case, it's running up here. So they're talking about being careful when you're buying, like we talked about, because could the price drop to $20,000 down here to this moving average? And the possibility is yes, right? But if you don't sell it after it drops, you didn't lose anything. You just have to be patient for it to get back. Now, obviously, you could also wait to see if it ever drops down here. What if it doesn't? All right, so the 4-hour chart shows that the bulls are buying on dips to the 20 exponential moving average. The bears have not been able to break the 50 simple moving average support since the price broke above $20,000. Thus, the first sign of weakness will be a break below the 20 EMA. Such a move will suggest that traders may be booking profits after a sharp rally. A deeper correction below the 50 EMA may signal a possible change in trend. There is a major resistance at $37,000, but if it is crossed, the rally could reach $40,000, which could again act as a stiff resistance. Okay, so here is the 4-hour chart, and you can see each one of these candlesticks is 4 hours. This is the parabolic curve we talked about. And then you have your moving averages here. And as you heard, it keeps on coming back and touching this moving average, touching this moving average, and so on. And that is where it kicks back up, is off the moving average. Now, if it drops below this red one, which is the 50 moving average, that's when it could signal a reversal and start to come back down for the correction. All right, ETH resumed its uptrend after a 2-day minor correction on January 2nd and has followed it up with another strong up move today. The upsloping moving average and RSI in the overbought territory suggests that the bulls are in command. The bulls easily propelled the price above $840,000 to $900 resistance today. The next resistance level on the upside is $1,000. If the price turns down from this level, the bulls will try to defend the $840.93 breakout level. If that happens, the ETH USD pair rebounds off this support. The bulls will once again try to resume the up move. On the other hand, if the bears sink the price back below 840.93, a drop to the 20 EMA, $700 is possible. A break below this level may indicate that the pair may be topped out in the short term. So now we're looking at this. This is ETH on the 1 day. You can see that it's been climbing up and it comes down and it bounces off that 20 moving average and then shoots back up. It broke above this resistance line of 840. And we have this is the other moving average that if that were to flip, if this candle or this price comes below this and then it comes up and retests it and drops, then we're looking for a correction there. If it comes down and tests this line and continues up, then we're looking for it to move to 1,000 and then even higher than that. And then you can see here in the RSI, it is in the overbought territory, meaning that the bulls are in charge right now, but it's also very dangerous because it is so high in the overbought territory. The 4-hour chart shows the momentum picked up after the bulls pushed the price above $840.93 resistance. The latest leg of the rally has pushed the RSI deep into the overbought zone, suggesting that a minor correction or consolidation could be around the corner. The wick on the latest candlestick suggests a profit booking by traders near $975. But if the bulls do not give up much ground and the pair rebounds off the 900, it will increase possibility of the break above $1,000. The bullish view will be invalidated if the pair turns down and breaks below the 840.93 support and the 50 moving average. So here we have the 4-hour chart, and as you can see, the price actually kept running up and it bumped all the way through. So it came here to the line, it shot up on this 4-hour wick or this 4-hour candlestick, and then it ran another 4-hour, but it did come into a wick here to 975, where people started to actually take profit. So it started reducing the price here. And you can see on the RSI, it's starting to create this little curve in the overbought territory, potentially signaling a small reversal, if not a full turnaround for a correction. Polkadot.USA, Polkadot.dot is currently consolidating in a strong uptrend. The bears are attempting to defend the $9.50 overhead resistance, while the bulls are buying on the dips to the $7.89 support. The DOT USD pair closed in the red on January 1st, but the bulls made a strong comeback on January 2nd. This shows that the traders are not waiting for a deeper correction to buy, as they expect the price to rally further. If the bulls can propel the price above $9.50 to $9.89 overhead resistance, the uptrend could resume for the next likely stop of $12.29. However, if the price turns down from the overhead resistance, the pair could remain range bound for a few more days. The pair may lose its bullish momentum if the price slides and sustains below $7.89. All right, so here we have the daily chart for Polkadot.dot. You can see the prices were running up here. This daily candle ran all the way up to the $9.50 level and it hit it. It came down and then it hit down here, the support level. It ran all the way up and through a little bit to the 950 and it dropped. And then as you can see here today, it ran up and it's still fighting. It needs to break through there and finish above this line, so that way it can get the bulls back on momentum and going forward. The 4-hour chart shows the bulls are buying on dips to the 20 EMA. This suggests that the sentiment remains positive. The upsloping moving averages in the RSI in the positive zone suggest that the bulls do have the upper hand. If the bulls can push and sustain the price above 950 for 4 hours, the next leg of the uptrend could begin. However, if the price again turns down from the overhead resistance, the bears will try to sink the price below the 20 EMA. If they succeed, the momentum may weaken and the pair may remain range bound between $7.89 to $9.50 for a few days. So here's the 4-hour chart. And you can see every 4 hours is a candle. So it came up here and it bumped that 950, came down, it ranged in these sections. It started coming down and it hit this moving average. It bounced back up and now it's trying to push through, and we need it to finish above there. And we can then know if it's going to run up for the next leg of this uptrend. BNB USD, Binance Coin, BNB resumed its uptrend today when the bulls pushed the price to a new all-time high of $41.5372. The upsloping moving average in the RSI and the overbought zone suggests the bulls are in control. The next target of the upside is $46 and then $50. The zone is likely to act as a stiff resistance. However, the current breakout is facing profit booking above $40. If the bull failed to sustain the price above $40, and the BNB USD pair may remain range bound between $36 and $40 for a few more days. A break below the 20 EMA, $34.99, will suggest that the bullish sentiment has weakened and traders have started to book profits. All right, so we can see here on the daily chart, it ran up here and it hit basically $40.57, and the current candle is trying to bust through there, but as you can see, the wick is starting to create here because people are taking profits. So we need to see if that'll push through all the way. And as you can see here in the RSI, it's up here in the very maxed out section of the RSI for the overbought. The 4-hour chart shows that the bears are selling aggressively above the $41 level, as seen in the long wicks on the latest 2 candlesticks. If the price dips back below $40, it could find support at the $20 EMA. A strong rebound off this level will suggest demand as lower levels, and the bulls may again try to resume the uptrend. Conversely, if the bears sink the price below the moving averages, it will suggest a possible change in the short-term trend. All right, so you can see here on the 4-hour chart, we've got the Fibonacci stretched out here. It came up to basically max fib level. It's been doing this consolidation. It hit this EMA, okay, a couple of times there. It keeps bumping up off of there. It ran up, and then it got to this top point. People sold, and it came back down. This next candlestick, it ran up, people sold, and it came back down. So we got to see if it's going to actually finish above this line, or if it's going to end up coming down below these moving averages and then indicating a downtrend. And you can see here, it's just at that overbought territory. It's starting to turn around and make a head down. So let's make sure we follow the charts here. And again, you can go to tradingview.com, and these are the charts you can see on there. They are free to check out. All right, Uni, USD, Uniswap, UNI, breakout of the $2.90 to $4 tight consolidation on December 30th and surge to $5.29 on December 31st. The bears are currently attempting to stall the up move at the $5.60 resistance, but positive sign is that the bulls have not given up much ground. The upsloping 20-day EMA, $4.06, and the RSI above 67 suggests that the path of least resistance is to the upside. If the bulls can drive the price above $5.60, the UNI USD pair could extend the uptrend and rally to $7.50 and then $8.60. Contrary to the assumption, if the price again turns down from $5.60, the pair may remain range bound between $4.50 and $5.60 for a few days. The positive view will be refuted if the bears sink the price below $4 support. So here we are looking at the 1-day chart, and you can see it came up in here and it just ranged in this little valley here, and it's been bumping off of these moving averages, and it is up here. It came up to the $5.56 level. That is where it needs to break through to see if we can continue the momentum up to the $7 range. The 4-hour chart shows the price has broken out of the The 4-hour chart shows that the price has broken out of the symmetrical triangle. The bulls can sustain the breakout. The pair could start its journey pattern towards $6. On the contrary, if the price slips back into the triangle, it could drop to the 20 EMA. A strong rebound off this support will indicate accumulation at lower levels, and the bulls will once again try to resume the up move. The positive view will be invalidated if the pair turns from the current levels and breaks below the triangle. The views and opinions expressed here are solely that of the author and do not necessarily reflect the views of Cointelegraph. Every investment and trading move involves risk. You should conduct your own research. That also brings me to the point where what we're talking about here on these levels is trading. There's a difference between buy and hold. Obviously, reading these trading charts and learning these charts and trading lets you know, okay, is it a good time to buy and hold, or is it a time to wait, right? So that's kind of the indication for buy and hold section here. But if you're looking to learn how to trade, day trade, learn how to swing trade, all of those types of things, I've got a video for you right now. Take a look at this. And there's also a bonus when you get started with the trading company that I'll tell you about as well. If you've enjoyed this part of it, going over all of the analysis and everything, don't forget to like and subscribe to the channel. Plus, if you want to learn how to read these charts, see what I'm seeing, understand the knowledge, I highly recommend you get started with Epic Trading. They are the ones that have taught me everything about trading crypto, trading Forex, trading stocks. Everything that I've known so far is from the school here. To become an Epic Scholar, just reach out to me. All you have to do is go to winwithryan.com. You can sign up for our newsletter, and that will give you information also about the Epic Trading University and becoming a scholar. When you get into the program, you get the full university, which has tons and tons of curriculum, has the best trading educators out there in the market right now. Epic Trade Alerts, they'll let you know when is a good time to put in a trade, when is a bad time to put in a trade so you don't do the wrong thing. Live trading sessions, you can watch live professional traders, 6-7 figure traders, do real live trades in front of you, see why they're actually making trades, and they teach you how to make trades as well. Fundamental analysis, just like the analysis you got here, but on all of the cryptocurrencies, on all of the different foreign exchange markets as well. Market forecasts every Sunday, and also member support. So if you ever have any questions, you can reach out and they're there to help. So thank you guys so much for watching the video. Don't forget to like and subscribe. Sign up for the newsletter, winwithryan.com. Hope you guys love it. Talk to you later.